Hey everyone, this is Patrick Donohoe. Thank you for tuning into this week's episode of the Well Standard Podcast. It is a pleasure to have you. You guys are in for a treat. It's an honor to interview Andy Tanner. Andy is a rich dad advisor. He is the author of 401 Chaos as well as Stock Market Cash Flow. He is also the host of the Cash Flow Academy podcast. As I mentioned, Andy's been on here before. He is a good friend of mine. We get to do some things with our families together. It's awesome. And we have these like marathon meetings whenever he comes in to do a podcast that last upwards of 4 to 5 hours. But Andy he's someone that I have a tremendous amount of respect for, and he has principles as his foundation as well as his personal values that I have a tremendous respect for. But yet he continues to change, and how he changes is because of the environment that he's in. Andy is a rich dad advisor. For those of you who are not familiar with Robert Kiyosaki, he's the author of Rich Dad Poor Dad. But as an organization and as a philosophy, they are constantly growing. They do not conform to the status quo. And so even though Andy has an incredible foundation, he continues to be challenged and refined just because of him being the paper asset guy. And he's written extensively about markets and the role that they play, as well as how to capitalize from an investment standpoint on it, whether it's up, down, sideways. So Andy and I have those discussions on the podcast today. So you guys are going to enjoy it. If you haven't listened to the previous episodes where Andy has been on, if you really like him, definitely go and look at those episodes. We'll reference those in the show notes. And with that being said, thewellstandard.com is how you get the show notes, as well as links to Andy's website, his social media, his online resources, and his academy, which is membership based. I know he has several free resources. However, his bread and butter is a paid membership course where he mentors you directly. So Andy's a great guy. You guys are going to love it. We have a cool conversation. This season is awesome. I wanted to have Andy on early because him and I have a very similar philosophy and perspective on things. And him speaking about the stock market, which is his expertise, I felt was appropriate, as I assume most listeners, especially new listeners, this is the primary investment that you are a part of. Yet most investors are participating in this asset class in very much the same way. This is a totally different way to look at it. So we hope you guys enjoyed this episode, and we will have another great one next time. But for those of you who are new to the show and want a better context as to how I perceive and view investments and the role investments have with your overall personal wealth strategy, go back and listen to the previous season. So we've had 5 so far. Obviously, the podcast has been on forever, since 2007. However, we have been taking a season approach where we're focusing on one central theme. And it's awesome that investment has really become the capstone of the previous 5 seasons. And those themes have been life, liberty, and property as the 2018 seasons and themes. And then in 2019, we focused on capitalism, which is the infrastructure in which the rights of life, liberty, and property really are able to bear lots of fruit, as we've seen historically. And then the entrepreneur, which is the last season of 2019, where we focused extensively on how to maximize your best asset, how to find ways in which you can improve yourself, make more money, discover a meaningful career, profession, something that you love that you would never retire from. So that being the case, hope you guys enjoyed this interview. Go back and keep supporting us the way that you have. You guys have been amazing. Subscribe to the podcast. Give us a good rating on iTunes. It always helps. And share with your friends and family. But without further ado, here is my interview with Rich Dad advisor Andy Tanner. Hey everyone, this is Patrick Donohoe. Welcome to this episode of the Well Standard Podcast. If you guys are listening, you can actually go and see the video of it. I'm here in studio with my buddy Andy Tanner. And he is my distinguished guest today.
Distinguished?
Yeah. Well, super distinguished because you came in 20 to 30 minutes early this time.
That distinguishes
and that's usually I'm like, well, Andy, what's going on?
Habits.
But we talk for 3 to 4 to 5 hours. Sometimes we've already been going for 2 hours.
We chat.
Yeah. Anyway, so we're here, but we're going to talk investment.
Let's do.
We're gonna talk your expertise, the
I'll
le-
do.
the
I'll do my
depth of
best.
experience that you have. No, I think you have a unique perspective, unique experience. I think is going to be hugely valuable. But we're going to start with some rapid fire stuff.
This stuff makes me nervous because I wasn't good in school under pressure.
Well, this is stuff you don't have.
I guess
It's rapid
is it
fire, so
opinion
you're
or
not
getting
gonna.
it right.
Well, it's all instinctive. So
All right, here we go.
All right, one word answers. All right, pre-work. Who was your role model? Someone that you looked up to, who inspired you?
Dad,
Superhero. What superhero or icon in history do you most resonate with?
Superman,
Charitable causes. What charitable causes do you support?
multiple sclerosis. I can't even say it, but the biggest one is CF.
Okay.
CF is huge for us.
What's CF?
Cystic fibrosis.
Okay, got it.
Yeah. Huge advancements, by the way, on that in the last year.
Dude, everywhere. I was reading Peter Diamandis stuff recently. Jeez.
Yeah.
All right, legacy. If there was one attribute that you can impress upon your kids, grandkids, the world, this audience, what would it be?
Self-discipline.
Awesome, dude. You're amazing. Dude, I was concerned that our chairs wouldn't align because when we stand side by side, I look
my
like
torso's wide and
how
short.
How tall is Zach now?
He is as tall as I don't know what it is exactly, but my dad kept a marking board.
Yeah.
Right. And he turned 14. He's as tall as I was when I was 16.
Oh man.
So he's 2 years ahead of me. But I had a heck of a spurt after 16. I grew almost a foot in high school. So we'll see if he keeps up.
He's gonna be taller than
but he can't. I'm
anyone else.
Still. I'm still a better athlete.
Well, we could go off on so many topics, but we're gonna talk about investment. We did
was that
we did rapid fire. Rapid fire was more to gain a person.
It tells you how a person thinks.
Exactly, right, and I think that's important, especially as you talk about investment, right? Because obviously you've written some books on it. We have them right up here: 401 Chaos, Stock Market, Cash Flow.
There you go.
Do you have any other books that we don't know about?
You know what? I write cathartically all the time. I don't know if I'll leave it on my computer for my kids to find all my little catharsis, but when I have an issue in my head, I find writing about it. If something bothers me, that's a great form of catharsis for me.
Well, that's a stoic.
And I can't type. I cannot type. So it's hunt and peck.
Oh man.
And a lot of really bad voice to text technology that makes no sense.
They're gonna keep getting that right.
I write as a person who doesn't know how to type or spell or grammar. I write all the time, but I don't like to publish. I like to write for my own. Is that weird?
No. Well, there's also there's so many different benefits from it. So Ryan Holiday wrote a book recently called "Stillness is the Key," and he talked a lot about writing and the fact that the activity itself gets so much out of your mind, right? And allows you to see things different, to see them clearer. Anyway, so that's amazing. That's very stoic.
I think that's a good insight. If something's inside of you and you write it down, it releases it from outside your body. At least it's out there where you can see it.
Yep. And the physical activity of doing it is huge.
Yeah. So I do a lot of that actually.
All right, let's talk about investment.
Yeah.
So this is obviously a very broad subject. So I just wanted to start with a broad question.
Okay.
How do you characterize an investment?
An investment is when you put something in, whether it be time, energy, heart, soul, money, and you hope with the aim to get more back than what you put in.
Does that happen a lot?
Sometimes it doesn't. Sometimes you put in, you don't get it back. That's what risk is, right?
So let's talk about financial investments.
Yeah.
What have you experienced over the years? Because you are this is your profession in a sense is money, financial education, speaking. You do a lot of market based things. What are some of the common reasons why an investment will succeed, and subsequently why what are the most common reasons you see that an investment fails?
Well, that's a question that could last the rest of the podcast. Really could.
Are there top reasons?
First of all, I think there are. I would say number one is financial education. I would say that is number one. If I were to write another book, I would call it The Second Bridge. In all my travels, I've seen two things. Why do people go to seminars? Why do people read books? Why do people listen to podcasts? Constantly, thousands of people are wanting to do better, which is good and right, and so should they. And when I've asked the question, if I start seeing the same faces and they don't get out of the rat race and they don't get it, two things that they
Mm.
usually don't have. Number one is they're in an investment they don't understand. So in a culture of advice, people center on the investment rather than the investor. Education is a personal development of the investor. For example, let's say we do some options. We sell an option. We sell a naked put. Um, you would think a naked put is a naked put for one person, for another person, the risk is there.
Yeah.
Not true. Warren Buffett does this. My mom does this. Two different outcomes. So the education and understanding of what you're delving in is massive. Most of the time in my life, when I've lost money and when I've asked other people that have lost money, most of the time it was a lack of understanding of what we were doing. We got excited about the investment, but didn't take pride as an investor. Is an investor someone who invests? Well, that's like saying someone with a scalpel is a surgeon.
Yeah. It's not the activity.
It is.
The activity is like
yes,
the activity of the
correct.
action's like the last
Yeah.
step.
Just
You
because
can't
I
just
do
go like
surgery,
you just can't skip to the last step.
I can't call myself a doctor because I do surgery.
Yeah.
I can only call myself a doctor because I have skill to do surgery and I'm
Yeah.
certified to a certain level.
Yeah.
The second gap, which is the one that is more frustrating for me actually, because knowledge, while I'm not a great student, I'm willing to work enough to get it. So I don't learn quickly, but I'm willing to put in the time to learn. Not a quick learner at all. But what really is frustrating in my life, which comes back to the question you asked, what would be the thing I'd want to instill in my children more than anything else? Discipline. Because often what happens is we have knowledge, but there's a second gap that requires a second bridge between what we know and how we behave. And so often I'll have people that I know darn well they know how to trade options, they know how to manage risk, and I'll see them blow up an account. I'll say, "Why'd you blow up your account? You know better." "Well, Andy, I didn't follow the rules." So the knowledge is the first bridge. If you don't know what you're doing, you're in trouble. So you bridge the gap between ignorance and knowledge.
Mm-hmm.
But once you have the knowledge, there's another gap between what you know and how you behave. I always make the same joke. It never gets old. I always say there's 50 pounds on me that my wife isn't legally married to, according to her. She goes, "I'm not married to that. That was not part of the original agreement." Well, one of the majors of many I went through in college trying to figure out what I want to do is exercise physiology.
Mm-hmm.
So there's no gap there in how this little pot of mine got here. No gap in knowledge. I know how it happens on the atomic level, right? The Krebs cycle, CO2, out, O2 and carbon in, the whole bit. But despite that perfect knowledge of how it got here, for some reason I haven't implemented that in my life yet. It's a lack of either discipline or implementation or whatever. So those are paramount to investing.
You have cognitive mastery, which is
yes,
the mastering
but not
information
mastery.
Yeah, and then you have physical mastery, right?
Not practice.
Yep.
Practical. Like in practice,
Yep.
There's not a practical mastery, which is why when you said for your sons, what's the number one thing? Self-discipline. The ability to execute what you know is really. Discipline is when you do what is right, whether it feels good or not,
Mm-hmm.
right? Or whether it's timely or not, or you just know what to do and you do it. And that's a huge part of investing. So this is an important question you've asked because we have a culture of advice where people don't want any of those bridges. Just do it for me.
Yep.
Give me a financial advisor, make all the decisions for me. I'll hire that stuff out. There's danger in that. Danger in that because now you're limited. There's a bit of a conflict of interest, number one, and now you're limited to their knowledge and their behavior rather than you're tanning over the ship. So if you drop your kids off to daycare for 20 years and you come back and they're not the people you wanted them to be, well, don't complain. Well, if you drop your money in a 401k for 40 years
or 409k,
we'll get to that.
Yeah.
I can't make fun of Trump's 409k because I can't type. I'm not allowed to do any of my own social media. My partner, Mike, if I ever make a post, I get chewed out because I can't. I'd be 10 times worse than Trump, 100 times worse than Trump. 409k. Can you believe that? Well, if you look at the 9, the parenthesis, it's a shift key, right?
Yeah. Well, I don't know where it is on his phone. That's on the keyboard.
Does he do his own tweets or does he hire it out?
I don't know. I have no idea. I have no idea. That's a good question.
Big picture, the key to investing is the investor less than the investment. The culture of advice is an investment-centered culture. The culture of true investing is personal development. of the investor. Warren Buffett is not who he is because of what he bought. It's because of what he knows and what he does. And there's more than one way to heaven. There's an interesting book by Zuckman, who writes for the Wall Street Journal, on Jim Simon. And it's interesting because Simon destroys Buffett in terms of returns. I mean, he's not there. He almost doubles him up. He's almost twice the effectiveness. And, Buffett, you usually start in the 60s when you look at what he did with Berkshire.
Yep.
This guy started in 88, so it's a good sampling. He destroys Buffett. Buffett buys and holds and gets dividends forever. This guy, he's in a trade for a week. He's a swing trader. Destroys Buffett. Doesn't matter which one you want to do. If they work, don't get dogmatic and saying this is the best way. But it's not because of what they bought. It's because of who they are. And I hate the 401k for that reason, because it suggests returns and prosperity minus the development of knowledge and discipline that is really required for anyone that.
So how do you, and I want to step two points back when you're making the comparison between Buffett and Simon.
Yeah.
When you compare returns, it's a comparison, right? Here's this fact, here's that fact. When you look at all the other variables, and this is where I've often said the same thing, but what I thought about when you said that is, what is Buffett trading, right? How much, what's the scope of it, right? How much of it?
It's not fair to compare them really, because Buffett, you look at Buffett, and I think he's only got one stock in his stock portfolio that isn't paying a dividend. I think the reason he bought is he thinks at some way it probably will, and his cost basis is so low.
Yeah.
So when you look at Coke, Buffett probably looks at it in two ways. Is if you compare Buffett to Simon, you can say, well, Coke's at 60 or whatever it is. I don't even know what it is right now, 60, 70, whatever it is. But Buffett bought it at $3. That's his average cost basis. So you can say, oh, he bought at 3 and now it's 60. That's his return. That's really unfair to compare that to what Simon does, because Simon will get more, because that's capital gain. But what Buffett really cares about is the $1.47 dividend they pay every year. If you're getting 50%, now he's at 50% a year on the dividend based on cost basis. So in that way, Buffett's probably destroying Simon. But either way, they both got more billions than they'd ever know what to do with either way. So it's a little bit unfair, because one is more of a cash flow model and the other is more of a capital gain model. And certainly Wall Street is all about the capital gain model. They don't care about dividends. They don't talk about it.
And I'd also say it comes down to objective, right? So if you look
what are you
at
after?
their objective, what are they doing? What are they doing it for? And then what is
effective?
What is the individual investor? What are they doing it for? Because for Buffett, it's a business. For Simon, it's a business. For the individual investor, it's kind of like, well, they have their business, probably their profession, their job, and so forth. But then you have their investment. So how do you read between the lines and say, okay, what is, a knowledgeable, educated investor, like, what's their objective? What are they after? And then the actual, training, education, okay, seeking that, like, do they need to have a really refined purpose in order to do it successfully, or does that not even matter?
Well, I think purpose and objective are different. Purpose, why am I investing? Objective, what do I want to achieve?
Okay.
So for the average person, this is a real quagmire, because the education system doesn't really point you to either one. The education system says work for money, get a job, right? Yeah. That's it. So that creates a problem for everybody, because they're trying to be something that they're not. So if a person, like, people come to me with the 401k thing all the time, and they say, what should I do with my 401k? Advice question, not a growth question. Tell me what to do question. So for that person, that's kind of a quagmire in terms of that objective and purpose.
Yeah.
Is they may not even know what that is at all in the beginning. So let's say my objective is to get that my purpose is freedom. So my objective is to get a passive income above expenses where I don't have to work anymore. That's fair.
Yep.
So that's where you begin to study, and that's where you start. Then you're a cash flow investor. Yeah, I have dogma that I prefer. My dogma aligns with Robert Kiyosaki's dogma, which is cash flow. But I will tell you, I would be dishonest. I would be blind to the truth if I didn't find many people that have become tremendously free, rich through capital gain stuff. Simon and Buffett are great examples. Buffett's a cash flow guy. Simon, he's a capital gain guy. billions both ways.
Mhm.
Both of them are financially free. Both of them don't want for money. Both of them are living lifestyle wise. They're very close. Philanthropy could be the same. I mean,
Well,
so
most money managers, portfolio managers are cash flow guys because they just live, they live off of fees, whether it's performance fees or management fees.
businesses is cash flow.
Yeah. Yep.
Businesses are cash flow.
For sure.
Like if you look at the BI triangle, you got your 3 integrities outside and your other 5 in for
The
8.
foundation is cash flow.
Yeah, the outside is mission, leader, and team, but
Mhm.
the inside foundation is cash flow. And
Mhm.
businesses are certainly fundamentally in a fundamental analysis. As soon as your cash flow is dead, if you look at that cash flow idea from a financial statement, you got 4 boxes: income, expenses, asset, liabilities. Let's look at those 4.
Mhm.
Okay, expenses always saying that's money going out, everybody has them. So now you got 3 boxes left. You either do what job people do, which is new money in, cash flow, or cash flow investors, new money in. The best way, I think, this is just my opinion, to deal with expenses that are new is with money that is new. If you have a new phone bill, you got to have new money coming in to take care of it. If that cash flow dies, now you got 2 boxes left to pay you got assets to
And
pay
liabilities.
or liabilities. So if you go to assets to pay, now you better be a damn, well, I better not swear. My mother hates it when I do
put
that.
the E on the
When I put
podcast now.
damn me, my mom gets so, I'm sorry, Mom.
Although I
love you.
did read that if you swear more on your podcast, you're likely to have more listeners.
Well, hell,
Anyway.
what are we doing? What are we doing? That would be easy. So if you have no cash flow, how do you pay your, now you're in the capital gain of, can you buy and sell your gold fast enough to keep up with your expenses? And that puts an hourglass. And then the third one is, okay, if you have no assets left and you have no income, now you have to borrow,
Mhm.
which is the cash flow pattern of the US government. So, and that's fine because they can print money, no problem.
Mhm.
So that's fine for them to do that. So you look at this, you ask this question as an investor: how do I want to? What's your objective? How do I want to pay my bills?
Mhm.
Do I want to do it with a job that gives new money? Well, then I get laid off and have to work. Okay, do I want to do investments that produce new money? That's dividends and rent. Or do I want to do it capital gain? Now you're moving from the income column, depending on the asset column, to pay your bills. That's tougher to do, maybe, unless you're Jim Simon, where you're a stud and you can compound that thing way faster than your expenses, which in a sense gives you a income above expenses in a way. But the problem with the 401k is that those 2 cash flow patterns, income was the old pension model, capital gain is the new 401k model. Most people don't have the financial education to see that the column they're draining into expenses is switched, and the risk has switched, because the income from a pension, well, that's the company's problem to deal with stock market fluctuation and problems. 401k, now it's me.
Yep. The responsibilities shift.
So as an investor, you can learn a lot about investing by looking at the 401k model and deciding, well, gee, what is my purpose? Is it freedom? Is it riches? If it's freedom, it's income, passive income above expenses. If it's riches, I mean, probably capital gain, because you're going to have to expand your assets drastically if you want to be a philanthropist and change the world, or, your cause, or if you just want to be driving, fancy cars, which is not my thing because they don't fit.
But it might be someone's thing. Your thing might be really fancy shirts, which you show up with.
That's my wife's thing.
Oh, okay.
That isn't my thing.
I thought her things were
Robert
shoes.
Graham is the only tailor that I mean, I'm sure there's probably richer people than me that can do better, but
I love your shirts.
He does big and tall, so that's who we go with, and my wife likes him. If it were up to me, it'd look like I just mowed my grass. I'd come in here in flip flops, and
I would like to have grass right now. I'm kind of sick of
a little
winter.
grass. What kind of grass? I know you're a libertarian. I know you liked, Johnson. He's kind of a grass guy.
You want to talk about the cannabis market? I'm actually going to bring on a guy that I met that is like, he knows more about cannabis. It's incredible.
My favorite cannabis stock, it's down bad now. I lost a little money. I was in it and I was writing covered calls on it, so the loss wasn't that bad, but I just liked it to play with it. You know what, I don't know what the official name of the fund is, but the The symbol's MJ, Mary Jane.
Mary Jane.
Yeah, MJ. I don't know what's that. It's like the alternative, you know, harvesting whatever fund, but it's been down.
But I think it's gonna
Cannabis
be-
is an interesting thing. My mom was asking about what it was. We saw a little what is it, CBD or whatever it is shop, and THC is the bad and the CBD is like curing cancer or whatever they say. And she didn't know what it was. And my wife, she's been using hemp lotion for 10 years, didn't even know it. I go, Marcy, I Google it right in front of her on the phone. I go, there's a marijuana leaf on the
bottle.
package.
Yeah.
She goes,
is it that lotion like that?
yeah, it's the white. Yeah,
I love that stuff. I use that. Yeah,
she's used it for years. I go, Marcy, there's a marijuana leaf on the thing. She goes, I'm using marijuana. I go, no, it's. Oh boy.
Well, all right. Let's make a point out of what we just talked about. How do you characterize markets, or how have you come to understand the different markets that are out there and their purpose?
Markets. Yeah, I'm not an economist, so you're smarter than me on this stuff. But to me, a market is a category of supply and demand. So we have an energy market. What is the supply and demand for energy? We have an agricultural market. What are corn, soybeans? What's the supply and demand for that? We have a financial market, which is really a stock price is based on supply and demand, not the earnings of the company. The earnings of the company is secondary. The supply and demand is primary. That's why the chart tells the truth more than the fundamentals do. So to me, a market is looking at the supply and demand, an emerging market. You know, what is the supply and demand for this stuff that's emerging in these countries? So that's the way I think about markets.
And that creates, I would say, all things being equal, fair pricing, right? So it creates, based on the supply and demand, it creates kind of like a clearing price.
In theory, AI is an interesting thing to think about, because most of the AI, my feeling is, I don't know a lot about it, so maybe I'm talking out of turn, but most of the transactions now on Wall Street are made by machines. And that's tough, because does it create a fair market? I suppose everything is fair. Define fair, right? Life isn't fair, so therefore everything is, right? All's fair in love and war. I don't know about war, Jimmy Stewart's mom, but yeah, I sometimes wonder if we're a little disconnected from the fundamentals sometimes, because if your machines are doing high frequency trading and the AI is really looking at just technical stuff, and, historically markets have gone up over time, and does it disconnect from the fundamentals? I certainly look at the run we've had in the last 10, 12 years, which is unprecedented. I don't think our GDP's grown. I don't think what we've actually produced. So is that fair pricing? Is it because, and I please don't hate me, I just don't know a good analogy. I'm not a sexist, okay, but I like saying this. If you had a beauty contest with all ugly girls, that's kind of what it looks like now. Is perhaps U.S. stocks are the least ugly person or man in the beauty contest.
That's why there's so much demand,
right? Would you rather, you want to save euros? You want to risk everything in gold that doesn't cash flow?
Well, it's not good for things to go down, right? The
unless
overarching, the overarching theory for business, right, is they like when things go up.
But if you look at Jim Simon's portfolio, do you know what his two best years are? Gosh, it's 2000.
Howard Marks, like he cleaned up.
Two best years he ever had were in the down. So is down bad? Well, it depends on it. It's all perspective, for sure. Right? Think about this.
But the overarching theory, though, it's like growth. People want growth. They want consistency.
Prices going up and down. Think about this. If you go to the gas pump and you're an employee and prices in gas go up, that's a bad thing. That sucks. If you own an oil company or you own some ExxonMobil and you see the gas price go up, well, depending on how many shares you have, so one guy can go to the gas pump excited and one guy's bummed. It's all relative from where you are. So I wouldn't say market's going up or down or good or bad.
So what
if it goes up really huge and it's a bubble, is it good?
Yeah. Well, what about from a company perspective?
Don't go off of this though, because look, is a forest fire bad? Is it bad to purge Yellowstone National Park with forest fire?
Yeah, there's always good
going
that comes
down.
From that.
Yeah, so going
it's hard
up and down.
In the perspective.
I don't see it that way. I don't see up as good, down as bad. I'm like, up is up and down is down. It's Robert Kiyosaki says it this way: I don't have a right hand and a wrong hand. I got a right and a left. They're just different.
Yeah.
So I don't see it.
And I love that perspective. I'm trying to see it from like in terms of the average person.
In terms of people getting hurt, gives you a different perspective.
Yeah, totally.
Because if you look at, and people say, oh, 401ks are going up, that's good for people going down. I don't know. They give all their money to Wall Street anyway.
And that's where I was going to, because a lot of the the asset prices, stock prices, company prices. I mean, there's been the biggest corporate buyback in like history, where you have
Yeah.
businesses that are essentially issuing bonds at really low interest rates, right? Not necessarily investing in infrastructure, right, but creating liquidity in their company,
Yeah.
keeping the price and the value high and going higher. But then you also have just this new wave of how businesses are capitalized and how valuations are done.
There's a lot of reasons to issue bonds though.
Yeah.
Other than that, well, look at Apple. Here, Apple's a great example. So
What repatriate
over in Ireland, they got all that money. So if they bring that money home, what's their charge? 30% or whatever it is, 30%. Okay, issue a bond at what, 3?
Yep. Tax free. Yeah.
Borrow money, tax free, repatriate the money you've already. I'd go bond every time.
Oh, 100%. And that's where, there's all sorts of reasons, but then I think you just look at, what you see most commonly, which is, corporate buybacks in order to prop up share value. Right. So I don't know. So I look at,
some people look at it that way. Some people say, oh, look, they're confident. They're buying their own stuff.
Yeah,
is it a prop up? Hey, speaking of propping up, you look at that in a macro idea. For this market to go higher, what is required for the market to go higher? Influx of cash. In other words, money needs to come from somewhere. Influx of cash.
Mm-hmm.
If that money's earned, it's one thing. If it's borrowed, it's another thing. Borrowing money to and if it's created out of nothing, which the Fed's starting to do again, kind of surreptitiously. You and I, that's a whole nother freaking podcast for you and I. No wonder when we get together,
the repo stuff.
Yeah. No wonder when we get together, we talk for 5 hours. There's
we can't stick on a topic.
You can, I can't. No, I mean,
but there's so many forces. I mean, I think fundamentally supply and demand. Okay, yeah, that supply and demand. There's this amount of supply. There's this much demand. This creates a price. If demand goes up, prices go up. If supply stays the same, if supply goes down but demand goes up, even bigger price. So it's one of those, like,
assuming a stable dollar.
That's fundamental. But then there are all of these other forces, right? So you have. Right. Obviously, the way in which accounting is done these days, the different financial instruments, right? Now you have so many different options in order to get an outcome. Okay? And then I think one of the biggest lawsuits going on right now is by Citadel, where they're suing their quant, right? This strategy that's all based on volatility. It's like they're in this micro volatility is where they're making all of their money. Right. It's not necessarily on the fundamental value of,
correct.
That
stuff doesn't.
Bank of America or GE or whatever.
I have a graph in my latest chart or in my latest class where I draw a line of time frame, from long term to micro, trading in milliseconds or whatever they do it now. And I have a graph of the importance of fundamentals against that.
Down and down and down
goes
and down.
To zero.
Yeah.
I mean, the fundamentals don't change in a microsecond. And that brings up another thing back with AI. People think they're worried about competing against AI, and I would warn them not to think that way, because you don't need AI. You're not trading against AI. You're not doing it. You're not competing against them. You're just playing a different game. Because here's the thing: the way you need to play the game, or the way you could play the game, I shouldn't say no one needs to do anything. The way you play the game is you say, look, the market goes up, down, or sideways. And I'm going to be prepared for all three in terms of risk management and position size. Number one. That's number one. Can go all three ways. Now, does it matter what causes that? No. In other words, if AI causes it to go up, who cares? It went up. Well, maybe it was better sales that made it up. Maybe it was better GDP that made it go up. Yeah. Maybe it was a devaluation of dollar where it just takes more dollars to buy that many shares that made it go up, right? Is it really more valuable then? Well, I don't know. But regardless of what makes it go up or down, I've never really cared, and nor will I ever care. So if it's AI that makes it go up or down, high frequency trading, I don't care. I don't care. But what is interesting is, if we're going that way, like you said earlier, does that disconnect you from the fundamentals? And the answer is yes. To a degree, you'd have to, because they're making such quick decisions there.
So who still bases their decisions on fundamentals?
Buffett does.
Who else?
Buffett, me. I care about fundamentals.
Yeah.
Um, I hate talking about the same stock all the time. It seems like every time I've been on a radio or on a podcast, I talk about Kraft Heinz, and it's a Warren Buffett company. He owns a ton of it, and I bought a lot of it last year off the dip, and I didn't do that for technical reasons. I did it for fundamental reasons, and I did it for cost basis reasons, and I did it because I think there's going to be ketchup on the table, regardless of what AI does. At the end of the day, I think there's going to be, if I go to a restaurant 10 years from now, I think it's going to be Heinz on the table. I don't know that. That's the risk, but that's my bet. And so that's a fundamental decision where I write options to get paid to buy it, reduce my cost basis with an eye of faith that their dividend will get higher with inflation, that their dividend will increase as the dollar loses value, and that my cost basis will be low and we'll still be eating ketchup.
That'd be an interesting, like,
that's a fundamental
econometric type of study, is to look at, the volatility and how quickly people's taste change when it comes to condiments as opposed to food.
Well,
I think foods change different.
Look,
or they differ.
That's a knock on
condiments,
Kraft Heinz. That's a knock on. Look, they own Oscar Mayer. They obviously Kraft macaroni and cheese, Philadelphia cream cheese. I mean, that Kraft Foods is like, I think Nestle is bigger than they are, but they're like the third largest in the country. They're big, right? But there's more salsa sold now than ketchup. And there's a couple big knocks on, if you want to look at the other side of that trade, not to get into the minutia of it, but a lot of people are more health conscious. And so they say, well, is macaroni and cheese in trouble? Well, I'll keep that personally sustained out of my own freaking family. So I'm not worried about that. Right? No, there's more salsa now sold than ketchup. People like salsa. People like to say salsa. Salsa. Jerry Seinfeld. People like to say salsa. But with that said, I still think that fundamental analysis, I don't think ketchup's going away. And the other problem with them is they've got too much debt. They really do. The understanding it economically is a big deal, though. They have their stock dropped. This blew me away that their stock dropped on this. And I feel like I'm on an island because I'm not an economics professor. Okay. I'm a C- average basketball player trying to stay eligible in college. But I didn't understand this because I always feel like there's people that should be way smarter than me on this. But they had a write down of their brand equity, meaning what's the brand Heinz worth? If we sold the name Heinz, could you go sell a new mayo under it or whatever? And they just overestimated that, which happens all the time. It's like, what's your house worth? You don't know till you sold it. It's the only time you know. So maybe you put down in your balance sheet, oh, my house worth, 10 million and it's only worth 5. So they wrote down billions in that, but that doesn't affect the cash flow. It doesn't affect how many ketchup bottles were sold. So their stock drops huge. I'm like, well, that's just good. That's just cleaning house. In fact, what that means is your return on assets just went up because the amount you're declaring in assets is now, that's a better ratio to income. So why is it going down? I don't know. Because the SEC is mad they did it. There's probably people smarter than me. But the thing that gives me a lot of solace in that, Buffett's making $300 million a year off it. If you have a machine that's making $300 million a year in dividend, and someone says, hey, your machine lost some value if you want to sell your machine, do you care? So again, cash flow investing, whereas these other guys, all these algorithms were about prices of stocks for capital gain, but from a dividend cash flow point, are they selling ketchup? Do you know what % of their profits go to the investors for dividends? 57%.
Oh, man.
Do you know why that's a big deal? Heinz 57.
Has it been that way is that just coincidence?
It has nothing to do with Heinz 57 sauce. So. It's just coincidence. But see, so Buffett's thinking about this cash flow wise. What does the company make? What do they sell?
Yeah.
The AIs are totally disconnected from the business. They're like, what's the stock price at? Which, I've tried to be less dogmatic. You and I are kind of, we like sound money. You and I like gold. We're probably not fans of fiat currency, but in the reality of it is I have to say, well, like we've been calling for crashes forever, right? Like you and me, like how long does it last? This just doesn't feel right. Money out of nothing doesn't feel right. It, our dogma in our mind is like, well, how can you put money?
It shouldn't be this way. It shouldn't be able to sustain itself this way.
But you look at Japan. I mean, how long has Japan been? I mean, their debt to GDP is the worst in the world that I'm aware of a major country, and
they continue to
innovate,
to grow.
100-year mortgages, crazy stuff. And I went back and read some of Bernanke's stuff, and if you're dogmatic about it, you say, wait, you don't print money out of nothing. You just don't. But what's really interesting, if you took his side and reread what he said about it, he says, look, currency like gold is valuable based on the value we place on it and the quantity of it we have. And the problem I see with it is that you can invent it out of nothing. But the reality of it is, and we don't trust men with that kind of power. That's probably where you and I have the big issue. But you think about it, if the population grows, you're going to need more currency. So what do? Dig up more gold to back it? Keep up with population demand. You can dig up more gold to back it. And if people did trust it, and as long as you controlled it, what's the difference? If we say this is $1, it's valuable, they're limited in supply.
Mm-hmm.
The problem is if men get there, what we see is they've just flipped that switch and they turn it on to fix everything. And there's no sacrifice of anything of substance.
Yep.
Money out of nothing, fiat currency is our issue. But I tell you, when we went back up to when the Dow hit 2000 or when the S&P hit 2000, I've been nervous. I'm nervous to be bullish ever since, but I have to do what the chart says. I can't just say, well, it's going to crash. I have to do what my chart says because the chart tells the truth.
But if you look at money supply and just how much liquidity there started to be, I mean, you can kind of go back in hindsight and say, okay, well, yeah, that totally makes sense why just things kept going up.
So here's what's crazy is we've got, what are we at? 22 trillion on balance sheet right now, on balance sheet,
Mm-hmm.
150 trillion off.
With all, promised obligations.
Right,
yeah.
off. Okay, so tell me this, because I don't know the answer to this. Now I'm interviewing you.
Mm.
So if you don't freak out at $1 trillion, and you don't freak out at 5 trillion, you don't freak out at, I guess the guy who really understands it is the guy that would know at what point it doesn't work anymore. Like at what point, like if you were back in the Ross Perot days where he had his little charts. Now back in 1970 when or 1903 when a dollar was a dollar, all that stuff. If you'd have told Ross Perot back in the 80s that we were going to have a $22 trillion deficit, and
he would have believed you. Yeah,
he'd have said it collapsed before then,
mm-hmm.
far before then, right? So that's an interesting thought. Is
well, I think we're beyond this point where I think people will freak out, right? And I'm not sure at what level it is. Maybe it's no level. I don't know.
No one talks about it but us. Congress ain't talking about it.
Mm-mm.
Trump hasn't talked about it. Pelosi hasn't talked about it.
Sleight of hand.
Is it really wag the dog for both of them? We're doing wars, we're doing impeachments, we're doing all this stuff. We're seeing like we got to keep this fight going, because if people realize that we owe $150 trillion, they're going to freak out. So let's just fight with each other in public. As long as we both agree not to talk about that.
I think it was interesting last year.
I doubt
it. Well, now we're in 2020, but 2019 when they diverted away from what they were trying to do with interest rates. I think they had how many cuts?
Yeah.
Three cuts.
What was interesting about that, and you and I have talked about this maybe more than the listeners care to hear, but what's really weird is your economic. If you looked at economic policy as medicine, to where say, look, the economy's sick. So what do we have in the pharmacy? Well, we can print money, we can change rates, we can change the fractional reserve rate. What are the tools in our cabinet? What medicine do we have? If you looked at the Federal Reserve as a pharmacy with different medicines,
mm-hmm.
I can see after 2008, where we just lost half its value, you're going to drop interest rates to practically nothing.
Yeah.
Okay, we're at all-time highs. Unemployment, according to them, is an all-time. How long is it? What's the unemployment number right now? Yeah, it's like, how far back do you have to go to find that low of a number?
Yeah, it's like one of the lowest ever. Yeah.
So here you got stock market all-time high. You got unemployment all-time low. Their job is price stability. Why are we medicating the economy?
Well, it's the government monetizing monetizing debt. Right? Yeah, because if interest rates actually did go up, they wouldn't be able to afford the interest on it.
The question is the economy really healthy if it has to be propped up? I mean, you and I would say no, because if you got to give you heroin, the heroin hit makes you feel good.
Mm-hmm.
Okay, get off the heroin, see how you do. in 2018, going into 2019, we started trying to pull off the heroin. We tried
Yeah.
to raise rents. Look what the market did when they started. And then Powell goes, well, we'll be patient. Remember that?
Yeah.
We'll be patient.
He has a good poker face.
Yeah,
I
we're
think
going to be
Powell's-
patient. Yellen was not very cryptic. She just kind of
No.
did whatever she said she was going to
Yep.
do. Powell maybe a little more cryptic. Bernanke a little bit more cryptic. Yellen just kind of was an academic. They're all academics. But yeah, it's interesting. Why
And the
are we-
repo thing
why are
too, yeah.
we- Why is the monetary policy accommodative right now? We're addicted to cheap money, right?
Well, it's almost 2008 just, created a precedent for the role of the Fed. Right? The role
Yeah,
of the
they're
Fed changed,
much
their
more
power
prominent.
changed, their influence changed.
What they did changed. I mean, they used to buy bonds. Now they're buying private stuff. That was a big change.
Yeah. Well, the whole repo thing is fascinating because
Yeah.
the overnight market, right?
Yep.
It was bank to bank lending, but when they stopped lending, then they
Liquidity.
because it was better, less risk and a huge reward keeping money at the Fed as opposed to giving it to each other, right? And then you obviously had banks putting up really crappy collateral, right? And that's when the interest rates spiked on the repo stuff.
Maybe that's why you got $1,500 gold again. Maybe some people are, they always want to turn to gold.
Yeah, it's just there's so many different things happening where I find it interesting, right? At the same time, I it's beyond my understandings from a rational standpoint.
It's really not. That's where technicals, people say, Andrew, you're a fundamental guy or a technical guy. So I talk about my Heinz trade as a fundamental trade. I'm in line with Warren Buffett. Why do I care about the technicals as well? Well, this is exactly why. It's because they tell the truth. Because when you come right down to it, let's say we know this, markets go up, down, and sideways. And let's decide to create a risk management strategy that does well regardless of the cause. Because what we're talking about now is cause, right? Oh, is it the Fed? Is it the debt? Is it the overnight stuff? Is it the repo stuff?
And what will happen in the future based on new causes?
Is it the AI stuff, right? We're talking about causation. But if you say, look, I don't care what the cause is, I just need something that helps me if it goes up, down, or sideways, regardless of the cause, then you really have a little bit of freedom there. That's why technical analysis is an important thing. Direction matters. And at the end of the day, it's the truth, right? It might not correlate to what the fundamentals are doing, but it correlates to your buying power and what you have to show for yourself, right?
Well, this might be a good tangent. How do you characterize risk when it comes to an investment? Obviously, you have
the best lesson,
more knowledge in markets, but
well, first of all, it's weird having an insurance guy ask me about risk because that's your wheelhouse, not mine. But I will say this: the greatest lesson I ever learned from risk is I credit Robert Kiyosaki with so much of what I've learned. And when I was, way back, we were in Phoenix, and I remember he said this, man, it just resonated as true to me. He said, risk is about control. The more control you have, the less risk. The less control you have, the more risk. And if you have no, and then he didn't say this, I said this, I thought, and if you have no control, you're gambling.
What are some examples of control?
Control is when you can force an outcome. So, for example, let's do several examples across asset classes, maybe. Let's say you're a guy like Than Merrill, who understands markets pretty well. And he knows that regardless of what the market's going to do, that he can take a single family home and he can renovate it. And people bash flippers. Why don't you bash developers then? Because all flipping is redevelopment. That's all it is. So if you can have a development business, you can have a redevelopment business. And if he understands what those rents are, and he understands what those home prices are now, and in a short amount of time, because it takes a long time for a housing market crash, he can force appreciation like Kenny McElroy does. Better management, better facilities,
Features,
better features, better, different cash flow stuff. They can force that appreciation, and then they go and borrow out money against it, and they get tax-free cash. So they're managing their risk with knowledge and being able to force appreciation of some kind. Kenny McElroy is the same way. He buys a development. He says, how can we raise the NOI? Can we force that to happen? As opposed to a stock where you buy Apple, now force the price up or down. So the reason that real estate investors freak out about stock is like, well, I have no control. I can't force appreciation. I can't force this up. Well, true, but if you marry the stock market with the options market, now you gain control back because now an option gives you a guarantee on where you can buy or sell. And it does it in a very liquid environment where real estate, boy, you get in trouble there. How are you going to get rid of that? So there's neither one's better than the other. So let's say as a salesperson, the reason people are so scared of working on commission is there's an illusion that they can't control the outcome. So one person goes into sales and his mindset is, well, I can't make people buy from me. But a skilled salesman that understands stimulus and response, if he controls the stimulus, he controls the response, and he can walk into a business meeting and know he's going to get the contract because he can force it to happen with his skills. Very low risk. If McDonald's if you find a square mile area with a certain population, a certain economic status, you plop a McDonald's in that, try to stop people from coming through the drive-through. All you can do is put your close sign up because you're going to make money. You can stop it from happening. So the amount of control you have, I think is the risk.
So markets, because I look at it is interesting because, risk, the probability of loss, the likelihood of loss. I look at real estate being more consistent. There are only so many things that could go wrong if you're able to look at, the example you just gave, which is, okay, here's this city, here are the demographics, here are the trends over the course of time. Putting McDonald's there, there's a high probability it's going to be successful, right? But I mean, ultimately there could be an earthquake, right? That happens and like boom, everything is gone. So my point is like, okay, from what could cause loss, how do you go about identifying that in markets?
I think there's a lot though, because I think real estate's more risky than that because real estate's dependent on the debt market.
Yeah, totally.
If you made a law that said you got to pay cash for it, what would happen to the real estate market today? You said, look, no more debt for real estate. In other words,
what happened if they did that in the markets?
The amount of debt, the amount of debt you have enables the purchase. And so the more you enable people to purchase, the more they'll purchase. The more student loans you create, the higher tuition will go. Why did we have the bubble in the 2000s in real estate?
Cheap credit,
zero down,
easy to get credit, yeah.
Zero down, no doc loans. In other words, anyone can get a loan. So when you give a loan to anybody, anyone can buy the real estate. To me, that doesn't sound like a real safe environment. It turned out it wasn't, right? But think about, people say, well, what about the stock market? All right. Mark Cuban has broadcast.com. They're broadcast baseball games over the internet all over. People listen to their baseball games to the radio. And Yahoo at that point was bigger than Google. They were much bigger than Google. Yahoo was the search engine. Some people didn't even know what Google was. And he sells his company for stock, $6 billion in stock. Yahoo's, maybe it's $100 a share, whatever it was. Bam, 2000 crash, boom, tech bubble.
That was pre-2000, yeah.
Yeah, tech bubble. 2000, it's $5 a share. So let's say it goes from 100 to 5, 95% is value. Cuban's fine. He's fine. Why? It puts.
Yep.
He bought the right guarantee. What's more solid than that? He's got a guarantee at which he can sell. A guarantee at which he can sell. No matter what happens, the company can go bankrupt. So as a person in the insurance business, well, why do I buy insurance on my home or my life or whatever else? Was to give me some guarantees, and people will buy guarantees. Those are derivatives. That's the derivative market. So, is one market more solid than the other? I don't think so, because they're so intertwined and they're both reliant on the debt market so much.
Oh, yeah.
And the bond market is probably The largest market in the world is the currency market. Okay, but
Bond market is right next to it.
the bond market is much bigger than the stock market, and the stock market is much bigger than the options market. So debt is probably the one that links them all together and makes them all risky because they're all dependent on debt.
Yeah, and it's all, you also look at risk associated with the bond market versus risk associated with the equity markets and risk associated with the options markets. The risk kind of keeps going higher and higher in a sense.
I don't know. I mean,
Depends on how it's used.
what's interesting is
Because bond is like a guaranteed
at
coupon
some
rate,
point,
but now bonds are not. Bonds are really used as kind of an equity in a sense, because it's bought and sold, not kept.
It makes the paper asset class relevant because people hate paper. I want gold. I want real estate. I want business. Paper. You die. Look, paper's everywhere. You put money in a safe for gold to show, well, it's printed on paper. You put your car in a valet and they give you a stub. It's on paper.
You have a title.
Yeah, you got a title for your real estate. You got an insurance policy. So what you're really talking about now is social to primal. If you want to take it to the extreme, is does your paper hold water? Because in a primal world, if I'm bigger and stronger, then I get the sandwich, and my kids eat, and we fight, and you lose, and it's not primal. It's primal. It's not civil. But if you're civil, you have a government, you have paper, you have agreements, because that's all these are is agreements. Is this paper has meaning, and it should. If we're honest and true, all paper is a handshake written down. So as long as there's honesty and truth, yeah, this is my house. I've sold it to you. Now it's your house. Agreed on paper. But if we go primal, we throw all that out, and then we put up our dukes and we go back to caveman days where the biggest, strongest guy, becomes the alpha male of the group. So paper's an interesting thing. So in order to invest, there's a certain amount of trust that you place in civility, a certain amount of trust that you put into this type of stuff. And, hopefully that trust is not always misplaced.
At the same time, markets, what's I'm not talking necessarily from your perspective, but, from a retail perspective, what is typically the fear or associated with markets and with market investing, and looking at I would say majority of people that have ownership or stake in the market, are they ones that do it based on your definition of risk? Is there a different definition for them?
So are you asking like factors?
Yeah.
Employment is a big number because employment suggests people's ability to buy. Debt is also a big one because it suggests people's ability to buy. You either have to earn the money, you have to borrow the money. Innovation is a huge one because if we innovate, now we're creating value out of nothing. Unlike a fiat currency, you create a new drug like trifecta for CF we were talking about earlier. Trifecta, that's $300,000 a year for a kid to be on that thing. So that's a new value there, and it's worth it.
It wasn't there for you.
It's worth it. So as you innovate, that's a factor. What's the risk of failure to innovate? Right now, China, the war between the United States and China is less of a trade war and more of a who gets to AI the fastest. And they've taken a much different path towards AI than we have. So if they out innovate us, that's a huge risk, right?
But they're also
the failure to innovate is a major risk.
I think
because that's called obsolescence risk.
Yeah.
His obsolescence risk is Blockbuster Video. They failed to innovate. Netflix did. They didn't. Netflix won. They're gone that quick. How fast did Blockbuster die? So you have legislative risk.
Because innovation always displaces the technology in which, was inferior.
So if you go out of the individual, you say, well, I have legislative risk. For example, the new 401k law, awesome for Wall Street. Again, horrible for the worker, under the guise of being better for the worker. Legislative risk. Geographic risk. Does the Middle East run out of oil someday? Political risk. We're going to start a war with Iran maybe, or whatever. Purchasing risk, inflation. So all these risk factors are there. and you look at them and you freak out. So how do you? So that's outside. Now, if you want to go inside, you say, what can I control?
Mhm.
And that's the real key. Again, risk is about control. Can't control legislative risk. Can't control this. So do I run from options? No, I embrace them because it's my best chance at control. An option is a guarantee. It is gives me a choice to do something. Someone else makes me a promise. Do they make good on it? Well, you can't control that either.
Because all those risks are evident, and then you have the retail investor world that really doesn't know how to control
Ignorance risk.
yeah, and that's where you look at having the upper hand is being able to know what your options are
That-
and be able to make
Yeah.
moves so that whether it's up, down, sideways, you're capitalizing on the opportunity.
That comes back to those two bridges. Look,
Yeah.
if you have ignorance to knowledge, any gap there is risky because now you're in an environment where you can't control it because you can't control what you don't understand for sure, right? And then that second gap is, if you don't apply it, then you're also at risk.
I found I was going to make a comment on China, which I think is fascinating because China has just tons of money, right? They had those
China has
cities, that they're
resources.
yeah, they're they're just building these massive cities because they have tons of capital. But what I found interesting recently, I was reading a report on the billionaires and millionaires of the world and the fastest growing population, and it's in Africa. It's like Africa, like
Interesting.
how? Because Africa,
Well, the policy of China, they have controls on population. They've had to, so they do have. They got a big population right now, but it's against the law to have kids over there.
But do you know where the biggest investor in Africa is? It's China.
Really?
Yeah. Huge. It's massive.
Interesting.
Yeah. So you look at what they're doing there. They have big presence in the Middle East as well. But I just look at China. It's interesting, right? Because you look at China, and I think years ago, when we would do a podcast, we would say, "Wow, they're building these massive cities. They have tons of tons of resources, and they have those limitations on kids. So man, they're destined for failure. But they're innovating, right? They're innovating by going outside and putting money into
way innovating.
Yeah, and that's where I find it's fascinating to see kind of how the world's becoming global.
It's important to be patriotic, but not dogmatic, because there's some like I'm a red-blooded American. I love my country, right? If I say, is it unpatriotic to say they might be beating us? Well, that's just reality. So you have to live in reality. You can still be patriotic, and that's not anti-American to say they're beating us. And it's really weird because they have this economic capitalism, and yet they still have this communal, communistic social stuff and control and Big Brother and all that. Hong Kong and China, it's a weird place because you go over there and you feel the energy of capitalism, and yet it's still under North Korea type crazy dictatorships.
And they're pushing back now. Yeah.
Oh, they're never gonna, you give them that stuff, they'll revolt. They'll want their freedom. Well, they kind of get enough freedom to make a buck. It's interesting how they're playing the game, and what we don't want to be. If we're not all part of the human race and we decide, okay, it's us versus them, we don't want to be arrogant right now, because they got a lot of minds. And if you believe two heads are better than one, how many engineers do they have as opposed to how many AI guys do they have working on this? Oh, we're just smarter because we're Americans. Tell you what, they have resources,
and they're spreading their influence,
and they have a culture of. I wouldn't say of an underdog, but we kind of feel like in America we're kind of it. Pride comes before the fall. You got to respect those guys. Probably the best thing to do is start learning how to get along in the world.
No kidding.
And work
fundamentals.
Together. Yeah, that's probably the best thing, like do unto others type stuff, and build bridges and not panic and see them as enemies. But that's the way the world has always been.
Well, as I was saying, it's like how the world's the world. We've known there's people all over the place, but it's becoming so much more linked. I think that's because of technology and a lot of the innovation that's happening, right? Is allowing third world countries, emerging markets, to start to live a better life.
Google Translate, where's that going to be in 30 years? I mean, pretty soon we'll be listening to a Chinese podcast, and they'll be listening to yours, and ideas will be exchanged so much more freely with language barrier dropped. I mean, innovation. So
And
I
that's
don't
where you
know.
look at this, there's this kind of velocity of people where you have innovation and ideas and things are just compounding. They're going to continue to. The language barrier is going to become less and less significant.
Do you think we'll be? Do you think we'll be? People hate change. Change causes upset. People resist change. Dogmas will take truth, chain it with their chains, and sink at the bottom of every ocean if it doesn't fit their rhetorical goals. Do you think as we innovate and truth is discovered from a epistemological standpoint, do you think that we're going to get? Do you think we'll be able to change? Like we'll have a culture change is okay now. You think that'll ever happen, or you think the DNA that we've evolved into just will just no,
I
don't
think change.
change?
I think there's equity in change. What I
Yeah,
mean
what's
by
that
that
mean?
is like equity, meaning like there's room to change, right? There's capacity to change. And in the US, I don't think there is tons of capacity other than the millennial generation who are going to be inheriting, trillions of dollars over the next 10
Problems.
years.
Yeah.
But I look at the rest of the world, right? Because we're 300 million people in the US, but there's billions everywhere else. And they see, as the world becomes more connected, they're going to see what's possible in life and they're going to want that. And so the equity for change I mean, it's huge. The capacity to change outside the United States, I think, is really big.
Millennials are interesting to think about. Is yeah, I don't like I hate that stereotypical thing is you just label all these people you're millennials and you
Wow.
judge them because
Yeah.
they're a diverse group and just like any other
Sure.
thing is. So with that confessed and with that caveat, they're an interesting group because on the one side, we see them as more open to change, brighter. They're my kids even below millennials. You got iPads, you learn different, you think about the world differently. And the other part of it though is a lot of them have they been tested like the greatest generation, like the World War II guys where they tested if they had resistance because on the one hand they're like everything should be free, school should be free, everything should be free, we shouldn't have to suffer,
Mhm.
don't say anything, like they're the kings of like they've been coddled a bit in that, oh, don't say anything that like assault can be done with words now, like you go to college, like that book The Coddling of the
Yeah,
American
we did it.
Mind.
Yeah. That was
All
our
of,
last
all of a
podcast.
sudden you go on a college campus, oh my gosh, I need to save from because someone said something.
Yeah.
So I look at them as maybe, are they strong to handle these problems? And the other, well, they're smart and they're open to change. So they're
Yeah.
going to be an interesting generation to see how they deal with all the crap that the baby boomers dumped on them.
And I look at there are challenges, there are problems, and there have been forever. And I think people go through different challenges, right? Obviously, going through world wars and being at the brink of death, that's a big challenge. I think the challenge is going to be different,
Hmm.
and the challenge may, you can measure extreme, but extreme in a sense is kind of based on perspective. But I think they're smart. They want simple. They want easy. And they're looking more for lifestyle than they are for security. And I think that is a different motivation that drives
Yeah, baby
behavior
boomers
that
were
is
security.
unprecedented.
Yeah,
And then
baby boomers were security.
when you put resources in their hands, right? I think it's going to be better used than with baby boomers. Because have you seen the Bill Gates docuseries that's
Mm-mm.
on Netflix?
No.
It's awesome. So it shows really the how he's helped to brainstorm, finance, create awareness to some of the global challenges, mainly in Africa, third world countries, whether it's just pollution or HIV or the water cleanliness. I mean, one of his big projects in that docuseries
Hmm.
that talked about was how kids in parts of Africa continue to die because of diarrhea, right? Because there's so much bad water,
Wow.
bad sewage, and so he essentially pioneered, not pioneered, but he brought good minds together to create a sanitary system that was affordable. And it took many, several years to do it, but what he's been able to accomplish there, I think that's the mentality. That's Bill Gates, right? But I think that's the mentality of
Those
those there,
guys. I
millennials, right? I
understand.
think that they're looking, they see how things should be,
They're
and
very
they're
they
empathetic to
care
other people.
that's where the equality comes from with
Yeah,
that group. They
yeah,
care about equality out of empathy.
yeah.
Um And quite frankly, the baby boomers did not feel that way.
No,
You know,
because they
they
were in war, and it was about
superiority
survival, and survival
yeah,
is you first, right, before
yeah,
anybody else,
yeah,
right? Millennials haven't had to go through that, so I think they are sympathetic, empathetic,
empathetic.
and that's where their minds work different, how they get information, how they organize. It's just it's different, and they
So
may be able to get a better outcome than the methods that were used previous.
could be they got more intelligence, more knowledge than we had in our generation.
Yeah.
But back to investing. You know, when you look at all the stuff we've talked about, generational stuff and economic stuff and risk and all that, investing is about wanting to first sacrifice, first put out before you get in. So that's a very that can hurt people right from the beginning, because if you're not willing to go out. Notice when you asked me that question, said what's investing. I didn't do it in a monetary sense, because I don't think about it that
Mhm.
way. I think about there's investments of time, energy, there's investments of love, there's investments of many kinds other than money, and it's when you give in hoping that it'll come back bigger. Whether you're investing in your children, you're hoping the fruit of that will be bigger than what you put in.
Yeah.
Playing the piano, you're hoping the fruit of it will be bigger than what you put
Well,
in whatever you do.
it's an exchange. I mean, it's an
Yeah, so it
exchange where
begins with that.
there's an output that's greater than the input.
And the thing that's tough is whenever you put something out, because there's not a guarantee that that'll happen, there's your risk. So you manage that with control, saying, okay, if I put this out, what can I control to ensure that this comes back to
Mhm.
me? And it's so much not about advice. In 2020, I'm going to take my gloves off, and I'm going to start punching advice and the culture of advice, because it's dangerous. Why fight personal development? Why fight that work? Why fight becoming before having
Yep.
or doing? Why fight becoming? No, just give me advice. Just tell me what to buy. A lot of people
Just give me the result. Yep.
if you were to listen to this podcast, what people are going to do is they're listen to all this talk we do about millennials or AI or any of the stuff we've talked about. They're still going to be caught in it. What am I supposed to buy? At the end of the day, what they're craving, what their addiction is, like heroin, I want to know what to buy. I want to know what to do. And there's plenty of people who will sell that heroin on the street. They'll sell it to them and give them advice, and they'll suck it up. But if you sell this in a different way of saying, no, it's not about what I'm going to buy, it's about what I'm going to be.
Mhm.
That idea of personal development, that should be sexy. That should be exciting. It should be healthy. And you look at it and say, okay, my schooling told me to get a job and it's not looking good. Maybe my next schooling is I'm going to learn to invest, and I'm going to be an investor before I have investments. That's behavior, right? When you take the be and you put the have, put them together, that's behavior. You got to be before you can have. The doing is in between behavior.
Now, I'll use as a final point, and then I'll have you just tell everyone how they can buy your books, access your courses, follow you.
Hmm.
What I would say is kind of on that vein, which is as I've looked at giving people advice and doing the podcast and having a business that revolves around it. People rarely connect to w- why they're doing what they're doing.
Mm.
They really connect to the objective. They do it because it's they're supposed to do it.
Yeah.
That's never qualified. And I look at when an individual realizes that they think all these things have to happen in order for them to experience something, and that experience gives them a feeling or an emotion. That's ultimately what it is. And I look at,
Mm-hmm.
those
Yeah.
emotions, those feelings can be experienced right now. You don't need all of these things to have that outcome. And that's where you look at those that have achieved enormous amounts of wealth, success, prestige,
Might not be
but they're
happy.
still like freaking miserable and way more miserable. Killed
Yeah.
in some instances, they take their own life.
No question.
So it's one of those things where you need to connect really the role of money, the role of an investment, because we live in a time that it's like we're all freaking wealthy. If you compare to like
Oh,
what
comparatively and
the other parts of
relatively
the world, and then look at
in
it,
history.
in history, and you look at just wow,
Yeah.
what we're able to do and experience, and like how incredible it is. Now, doesn't mean that investing and achieving more, it isn't going to bring more of those experiences, but you got to connect that first. If you just go about thinking that your life's going to suck until you have this much money or this job or this title or this, bank account balance, it doesn't work that way, right?
I don't get out to church. My parents raised me really in church, and I don't get out as much these days. But there's a wonderful passage that I remember, and I don't remember where specifically it came from, but it was about a group of people. It's a wonderful ideal where they kind of figured it out. A group of people that had a society where it was almost communist because they had all things common among them. But it said this is and they lived after the order of happiness, and that's a huge thing. When you look at the role that money plays in that, Maslow's hierarchy is instructive. Is food, clothing, shelter? You got to have some to do that. And so people say, well, money can't buy happiness. Well, hunger doesn't buy happiness, and sick kids without medicine doesn't buy happiness,
Oh.
and being naked and afraid on day 25 isn't happiness,
Yep.
especially if it could be day 300,
Mhm.
right? As you go up there, then you look at familial relationships that are different. Well, having money means you have time. I think having a little extra cash has helped me spend more time with my kids.
100%.
I think it's been better not to have a 9 to 5 job that most people look at normal and having more time to put into my
Mhm.
kids. Problem though is some people get caught up with money. They never put in that time for those relationships, and the money eclipses the relationships. So they're killing. So in that case, money, too much of it kills that hierarchy. Self-actualization, try to buy that. Try to buy that.
Can't buy
How
that.
many Ferraris can you buy? You're not going to get it, right? You're not going to get it. So happiness, huge part as you get into your investing thing. I love Robert Kiyosaki's I cash flow game rat race, because really the rat race, if you or
Cash
cash
flow.
flow, if you get out of the rat race, that's really when you win it. It's not when you get to the fast track and now it kind of gets ridiculous after that. Not ridiculous, but in that, okay, now I'm doing these charity things, I'm making millions of dollars, and I'm buying this, and I'm, open up. They're big deals. But really, when you look at where that game is really played on the first page of the financial, when you get passive income above expenses, now you have freedom. That's a huge happiness thing, man. That's a huge one. And so if you go into your investing and you say, you know what, if I don't do anything more than that, is get passive income above expenses, I think there is some happiness to be found in that. I think that it's not in the money, it's in I don't want to call it the status, it's in the life that you have at that point. Where now, if you have time, you can study what you want to study. And if that's your thing to go out and get another, 100 million, then great, you have to pursue it. But I'll tell you, passive income above expenses out of the rat race, that's a good place to start with a goal of investing. I think that many people would find attractive.
And I'll end with this because what you're saying is profound and still goes to that idea that it's life people are looking for, and they think that having to get to certain points, from a financial standpoint, is when they're going to be able to experience it. And I'll use an example with a client who got divorced right as he was about to sell his business, and he owned tons of property. He had been going on, to different personal development, conferences, and had studied and read books and watched videos. And while he was doing it, it was all for his family. That's what he told himself. But yet he neglected his family the entire time,
Wow.
neglected their needs. And, it's that whole mentality where I'm doing this all for them. They should love me because of that. But most people don't, they won't give you love for that specific purpose. Plus, after you achieve that level where you have the money, you have the freedom, you have the time, and then suddenly life is going to start. I I I keep going back and forth on it because I look at the necessity that's in me, which is I have to keep growing, I have to keep contributing, but I find fulfillment in that. And if I do more, then I'm going to have more of that fulfillment. But yet I've connected
Yeah.
the fulfillment piece to it. I'm satisfied, fulfilled right now. And if I get more, it's just going to be more, but I'm good with where I'm at right now.
Investing is not about money.
Yeah.
In other words, money is a subset of investing, but not vice versa.
Yep.
And we kind of opened the program with it is investing in people is a huge thing. Investing in hobbies is a huge thing. Investing in growth is a huge thing. How we spend our time, that is the investment that is
Investing in your
required.
family.
It's required.
Yeah.
Like the time is going to be, you're giving, you have it, you have a limited amount of it. You can't make it. And how you invest the time is huge. Part of that time will be invested to learn and make money. Part of it will be to foster relationships. Part of it will do personal, philanthropic things. What did you achieve? What did you build? What's your legacy? I mean, Steve Jobs, incredible legacy. Look at the stuff we use and what he left and what he gave us.
Mm-hmm.
That's. I don't think he went to work for more money. Don't think he did. He knew what he wanted, who, why, all that stuff. So
Yeah, watch the Bill Gates thing. I think you'll
yeah,
you get a kick out of that, because talk about a guy that doesn't have to
Thanks
do
for
anything.
having me. This was fun.
Sounds
It's
good.
always fun for us. We don't hang out enough.
I know.
We live in the same city. We should hang out all the time. Our families get along awesome.
Christmas gifts. We exchange Christmas gifts and Christmas cards.
I'm not going to tell you what I got from you, dude. That was so good. Marcy was like, "Are you serious?" I go, "Is he serious?" I go, "It's Patrick. He's never serious." Dude, it was awesome. Both of them were awesome, but the one particular one I'm talking about was, I haven't tried to practice with it yet.
That was the purpose.
Don't know where you come up with this stuff.
I don't either. All right. Well, how can listeners get a hold of you? Learn what you put online.
I'm changing my pitch on this stuff. I don't want to rant. I know we're at the end of the show. When I Google stuff, they Google me like everyone else does, right? I mean, Google's looking at what I search, and because I'm investing, like the ads I get on my YouTube stuff are all about stocks, all of it. And I'm so sick of them. I hate them. And I hate how they're presented. It's usually some guy in a Learjet. I'm the greatest option trader. There's this new one now. I used to work on Wall Street and I found their dirty little secret. I'm going to share it with you. And I'm just like, are people this stupid? So I'm going to be really clear about, like, before we talk about how people get a hold of me, who should get a hold of me first. I am just going to take my gloves off in 2020. I have no interest in people in having any students or anyone read my books that want advice and that don't want to develop themselves and put in a little work. So this probably cuts out, like if I say, come to my website and I was over in Vietnam and I saw some people saying, yeah, just sign up for my program, click the button, follow to do, it's $10,000 a day. I was like, people believe this, and they sign up for these programs. So, my website's the Cashflow Academy. And the way we approach this is we say, look, the people that want to learn and be investors and get excited about learning, it's the best place in the world you could go. It is the best place in the world you could go. The people that want quick tips, the people that want something for nothings, that's not an investment. Remember, something for nothing is not investing. Investing is putting out something and then getting something back. If you put out nothing to get something, that's not investing. It's not. And so we've just tried to purge like any messages when we do promos now of we really don't want to work with those people. Frankly, we don't. So that kind of sounds weird. Like, Andy, tell us right. First, I'm saying, look, there's only a certain type of people we want to drop by. Is that bad to do?
No.
I don't know if it's bad to do or not, but I've just grown so weary of the environment of advice and programs and books and stuff that I just like to be very frank and clear. Would you like to do some work and put in some effort to gain knowledge and discipline? Then we're going to be a great resource for you. So
it's kind of like the natural order. It's the natural order of things. If you want to get something, more than what you currently have, like there has to be output. More in the process.
Right. So, our website's Cashflow Academy. We got a lot of free stuff for something for nothingers to satisfy them, but yeah, it's good stuff. We teach the 4 pillars of investing. We teach fundamental, technical analysis, cash flow, risk management, do it in a way that's fun and simple. And cashflowacademy.com. That's where we're at.
Okay, man. It's good to have you here.
Really fun to hang out, man. I always look forward to this stuff.
Our
I don't know
mar-
if
our-
anybody else cares about what we talked about, but I love hearing
No, sir.
what you have to say.
Yeah, we have like our pre and post conversations that take up pretty much the entire day.
Yeah, we just can't. I always answer your calls and stuff, and I think if I call Patrick, he's going to put me in voicemail because it's an hour if we talk. But you always answer your phone. It's pretty amazing.
Well, I would always answer your call, Andy.
Oh, we haven't gone on a mandate for a while.
We should go see 1917.
Let's go.
That
I'm
World
in.
War I movie.
I'm in.
All right, let's do it.
Is that the one where it's all in real time and they never break from the camera?
Yeah.
And it's like a real cinematic achievement type thing.
You want to do that?
Yeah, I do it.
Okay.
I don't think Marcy and kids want to see it. I'll go.
Oh, okay.
But I heard about that. It's like a real, like,
Oh, it is.
innovative cinema.
Oh yeah.
It'll probably win the Cinematography Academy Award. And
I think they had some awards recently. That
they
won
already
a bunch
done
of
all that stuff.
But yeah,
I
it
don't pay
looks.
attention to
I
that
love
stuff.
like war movies and stuff.
A lot to learn.
Okay. All right,
Thanks,
Andy.
man.
Thank you, man. Appreciate it.
Awesome.